Our goal here, by the way, there are a lot of interesting people working on, a lot of really good people working on this. The EF is working on this. We just want to bias towards action, right? I don't want to spend a year writing the absolute best spec and then another year implementing that, because I think so much is here today. I want to say, hey, this is what works today. We're building this right now, which is what we're doing. And we can continue to analyze it and can continue to improve it. And I want to be in all those conversations and calls. And if in a year or two we have something better, let's swap that in. But this is a solution that this is a problem that needs a solution today.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today, I'm joined by Stephen Goldfeder, the co-founder and CEO of Offchain Labs. Thanks for coming on the show, Stephen.
Great to be here. Thanks for having me.
I think we should probably Arbitrum's massive, and everybody knows about you guys. So I think I'll try and keep it as focused as possible. And I want to talk about Timeboost, interoperability, and where Arbitrum stands today. But before we get started, it might be a bit helpful to get a short overview of what you guys have been working at Offchain Labs over the past few months.
Absolutely. So I would say there are broadly three pillars. So we obviously continue to contribute heavily to Arbitrum and Arbitrum development. Some of the biggest new technical developments there are Arbitrum Stylus, which gives developers the ability to write smart contracts in Rust and C and C++, right alongside and fully interoperable with EVM. So you can have, say, a single application that's a mixture of Solidity / EVM and Stylus code. Number two is Bold. This recently shipped on mainnet. This is the new challenge protocol, which among other things opened up validation and Arbitrum chains for everyone. So now anyone can be a validator fully permissionless of Arbitrum chains, which is a very, very big upgrade when it comes to a security perspective, because ultimately the validators are the one providing securities, and now anybody can participate in that. Another one is Timeboost, which is a new transaction ordering policy, which tries to give everyone what they want. So appeal to both people who just want fast block times on the chain, but also internalize some of the MEV value as well. So that's basically on the Arbitrum side, technical, some of the big things we've been working on. We also built Prism, which is the leading layer 1 consensus client for Ethereum. A lot of interesting things going on there, a lot of pure DAS development, looking to increase the blob count. So a lot of very interesting layer 1 development, and a particular layer 1 development that's going to continue to help Ethereum be the platform for successful layer 2s, right? So there's an interesting merger of these two threads where increasingly a lot of the layer 1 development is focused on the rollup centric roadmap itself and becoming the dominant platform for layer 2s. And we've also been working a lot on interoperability. Ethereum is, well, particularly if you ask someone outside the ecosystem, they'll tell you Ethereum is fragmented today. I think a lot of it is a narrative problem, but there's also obviously some technical truth to it. Ultimately, I think it's a good thing because it means there's a lot of different people developing different things and trying and experimenting, right? And the other side of that coin is things are a bit fragmented. So the question is, how can we build the best Ethereum user experience possible? Not just the developer experience, but also the user experience from onboarding to interacting across multiple chains in the Ethereum ecosystem. How do we make that seamless and intuitive? And we've been doing a lot of work on that at Offchain Labs as well.
Fantastic. I want to talk about all of those, but I think the main thing to get us started would be Timeboost. Can you walk us through what the Timeboost upgrade will be, the proposal is, and what exactly it wants to achieve?
Yes. And by the way, it's well timed because this just went live on Tally, which is the on-chain voting platform. So it's being actively voted on in the DAO in the final stages now, right? So it started off a snapshot, get approved, and now it's actually in the on-chain voting process. So definitely a very timely time to discuss this, and something the DAO is weighing right now. And yeah, so what Timeboost is, it's funny because if you actually take a step back, there's always been this push that says decentralize the sequencer. And I'm a big fan of decentralizing the sequencer. But I think what people don't realize always is decentralizing the sequencer doesn't mean anything in a vacuum, because you have to ask the next question is, what do you want the sequencer to do? Or what policy would you like the decentralized sequencer to enforce, right? So there's a sequencer which sequences transactions according to some policy. And those policies can be enforced in a centralized or a decentralized manner. And depending what the policy is, the decentralization path looks very different. So today, let's focus on the policy. And there are, before Timeboost, there have been two broad classes of policies among sequencers. The Arbitrum sequencer still today and always has done a first come, first serve ordering policy, which basically means you send transactions to it and it publishes the transactions in the order that it sees them. There's another policy all the way on the other end of the extreme, which says sorry, on the Arbitrum side, the first come first serve tries to enforce some order of fairness, right? So those who come first, and there will be those that argue that this is not fair, but ultimately, it's a very very basic concept of fairness that the transactions should be processed in the order that they arrived. On the other hand, you have people that argue for systems called what we call MEV auctions or MEVA, which you may have seen over time, which is the idea is no, don't prioritize the order that they came in, give the first spot to the highest bidder, right? So maximize the value for the chain, maximize the value capture for the chain, maximize the value capture for the chain in ordering transactions. And your average user, a regular user who just wants to pay, say, a little bit and doesn't actually want, to pay a lot, might see that his transactions get delayed or deprioritized. And these are like sort of, the two bookends here. So on the one hand, you have the thing that's maximally fair, I would say, to your average user. They're going to get their transaction in quickly without delay. And by the way, that's one of the things people really like about Arbitrum today, that it's fast, it's efficient, and you have really fast block times. Arbitrum block times on the public network are 250 milliseconds, which is basically the fastest blockchain out there. You have other blockchains today that are looking and trying and building all sorts of pre-confirmations to try to get the block times this low, but Arbitrum natively supports 250 millisecond confirmations, and actually even faster. You have Orbit chains, which are Arbitrum chains that are others are running using the same technology stack, that actually go down to 100 milliseconds. A good example of that is a chain called Rhea that does that. So the technology is really stable at very, very low block times. On the other hand, though, you have the MEV auctions, which is like great for internalizing MEV value. Because what happens is, what's the problem with the first come first served? But the problem is there are still MEV searchers in the chain, and they really want to get their transactions in quickly. So what do? They try to shave off the time to the sequencer, and they end up paying a whole lot of money externally to the system, say to web or cloud providers, or try to buy computing power in particular locations, really to try to shave off milliseconds to get to the sequencer more quickly. So with today, all that value is being externalized, right? All the who's capturing the value from MEV. It's not that it's not happening. It's that they're just paying others. Maybe they're paying their cloud provider, or maybe they're paying someone else. So they're capturing whatever value they capture themselves, and it's all going outside the system. The chain is not capturing. In an MEV auction, the chain is actually capturing that value, right? Your average user transaction might get delayed for a long time, but the chain is going to actually capture the value of the MEV. Because if I want to buy priority, I'm not going to go ahead and try to, get better positioning and shave off some milliseconds by getting a better cloud connection, or getting a better cloud positioning. I'm just going to, bid directly in the auction, and that's going to be my best path to do that. And the beneficiary of that is the chain. So the question is, how can you have the best of both worlds? And that's what Timeboost tries to really achieve. The last technical piece before we get into the Timeboost solution is another feature of Arbitrum today, which will remain, and that is that it has a private mempool, right? So the idea is that your transactions aren't publicly broadcast for others to see before they're actually included. They're privately sent to the sequencer, and the sequencer publishes it. So if I'm looking at your transactions, the very first time I know of your transaction is when it's already actually published. And what that means is there's no front running. I can't try to, I see that you're trying to do this trade. Let me pay a lot of money now to try to get in front of your trade. I can blindly try to buy better positioning, saying, hey, I think someone might be doing a trade like this. I want to get in over here, but I can't actually look at your transactions and front run them. We think that's a really important property. It's one that exists in Arbitrum today, and it's one that we want to be preserved in any solution. So what Timeboost does is it kind of tries to straddle both of these worlds and give you the best of both worlds. And what it does is it says Arbitrum is still going to have these really fast block times, but there's going to be a notion of an express lane. And so you can buy basically for a short period of time, you can auction and buy an express lane, which gives you a slight priority. And the way to think about it is all the express lane transactions will get included in the next block, some of the non-express lanes transactions might get pushed one block later, right? So you're still gonna, and what that means is for your average user that's just playing their game or doing something, basic, they just want to know they're going to have a really fast block time. They're still going to have a really fast block time. The worst cases, they'll be included not in the very next block, but in the block after that. But the block times are very fast. And so it's still going to feel very fast to them. For those that want to buy a little bit of an edge, they'll be able to buy the express lane ticket to guarantee that they will be included in the very next block of these transactions. And what we see here is, yeah, a really nice properties for both people. Again, those that don't care about ordering aren't going to get delayed, right? No matter how much these other people bid, they still know that their transaction is going to get included very quickly. They're not going to get delayed indefinitely. It may be the next block, maybe the one after that, but really that they won't get delayed past that. But those that want to buy priority are now going to have an option to do that for the chain. So the chain is now going to actually collect a lot of the value that's being spent in the ecosystem anyway, but to date it's actually being spent externally, and the chain is collecting zero of that value.
And with Timeboost, but as far as I understand, so since there's a private mempool, you can't do front running, but you can still do liquidations because you have the knowledge of after the block. So for the next block, I can include healthy MEV like back running as well as like liquidating lending positions, etc. Right? Correct?
Exactly. So yes, the way we like to think about it is there's different types of MEV. We think front running is, the bad type of MEV, one that we think should be eliminated to the extent possible. And then there's like back running, which basically says like, hey, I see a transaction here. I want to get my transaction very quickly. And maybe I want to buy an express lane ticket so I can know that I'll get my transaction immediately after in the next block after this transaction or something like that. That we consider to be more healthy MEV, things like arbitrage. Again,
Yeah,
so it's the idea here is not to say all MEV is bad, but we think the idea of seeing user transactions and front running them, that's something we'd like to prevent. And the current Arbitrum design today doesn't allow for that. And the Arbitrum post time boost will not allow for that either.
that makes sense. What's feedback been like, and are there any like general concerns over the Timeboost proposal?
Yeah, I think that there's been a very, very healthy debate about Time Boost. Generally, it's a new system that kind of deviates from the priority fee like systems that others are using today. So anytime you introduce something new, there are those that are going to have the fair questions or hey, like why didn't we just use this A B C D E? This exists today. And I think it's a very strong value proposition, which it really provides, some very, very highly desired features, but also, provide some of the benefits of some of these other systems. So I think it's a very unique, interesting place in the design space. And ultimately, though, there are definitely people that have questions and see it differently, which is why I'm very happy that it's going to the DAO, and those voices will be heard. Right? I don't know what will happen at the DAO. Honestly, I think that there's a good chance that it gets passed. I think there's some chance that some voices say, "Hey, we don't want this," and um, it's not a win or loss to me either way. I'm a proponent of it. I think it's a good idea, but ultimately, the way we set up the system is that the community decides. And if the community decides, hey, we don't want this or not at this time, that's okay. The nice thing is that we've also built in, I think, one of the places of some questions or concern and honestly uncertainty, because no matter how much modeling you do, until the thing actually runs in public, you don't exactly know is how much how much delay can you buy, right? So I mentioned the default is 250 milliseconds, which is basically one block time. That can be shrunk down. You can do 50 milliseconds of advantage. It can be shrunk or expanded. So the proposal and the way that it's written gives the operator or the sequencer the ability to figure that out in some range to find the optimal amount of time for time boost. And I think again there will be some, I would imagine, parameter finding and making, once the system is live. But ultimately, I think that this gives the sequencer enough latitude to find a really, really good set of parameters.
Okay, so since you guys have been in the L2 Interop working group, I'm curious what are the biggest challenges you've seen in achieving true interoperability for the Ethereum ecosystem?
Yeah, it's a great question. So I think first I'll say is I think many in the community view Interop as this very, very deep, deep technical, research problem. I think that there is an aspect of that, but I'd actually argue that probably 90% of it is a UX problem. and then there's that 10%, which is a deep research problem. What I mean by that is there's definitely like a lot of deep research you can do around, say, bridging between chains, deep interop, even like arbitrary message passaging, how to do this in trust minimized ways, efficiently, etc. And we'll definitely get better than that over time. But I think we already have a really, really good tool set, but it's not necessarily being presented to users in the most intuitive way, in a way that they can just like know exactly what to do. When I speak to users, there's some like just L2 fear, right? Honestly, you can go to Coinbase or Binance or really any exchange, and you don't need to know anything about an L2. You just say I want to use Arbitrum, and Arbitrum is there like Ethereum, like Solana, like any other chain. But there's definitely some fear among users, like, oh, this seems more confusing because it's a layer two. So I think a lot of it is a narrative part, but also like UX. You go to the Solana ecosystem, the phantom onboarding, you go to Jupiter, you know exactly what to do, what to use, and it's very, very clear. I think because there are so many layer twos, and because there's some of this like almost confusion without even using the product, and just like there's a assumed complexity, right? So I just assume that using a layer two is hard, even though it's not. Like there's a lot that we have to do there to actually package up the user experience. So a wallet is a really, really great place to start and say, how do we just get better onboarding experience for users? There are a lot of really good teams building in the wallet space today, and I think just integrating some of the technical solutions we know how to do today is going to be a big step to that. So we at Offchain Labs recently announced something called the Universal Intent Engine. And this is an intent-based interop system. And our goal is to basically get less than 3-second interop between any chains that are participating in this, with an initial 5 chains five chains initially, and hopefully expanding much larger. So permissionless open set of contracts that can work today and on any EVM chain. And the idea is it's intent based, right? So the idea is that it's using liquidity and intents, but it also has something which is really, really neat, because one of the problems with these systems is, like, if you have a liquid chain, you'll have an ecosystem of solvers that will participate and can actually make the system work. But let's say there's like a new chain that launches today, right? There are over 100 Arbitrum Orbit chains in development. Solvers aren't going to have the incentives and the liquidity to be able to support all of those. So we added something here called the Solver Loan Program, which is being funded by the Arbitrum Foundation initially. And it's a really nice solution that basically says, you can go on these chains and get basically interest-free short-term loans to go ahead and actually solve these intents. And it makes it economically feasible for solvers to come in. They don't have to lock up liquidity in fragmented ways in different chains. The liquidity is there. There's like a hub in Arbitrum One, so they can manage their liquidity over there, take these loans, pay them back. And the nice thing is it's extendable, right? So the Arbitrum Foundation is not going to be able to do this for 100, 200, 1,000 chains. But if you're launching a new chain yourself, you can go ahead and participate and put up the liquidity yourself, maybe in your own token, and now have your chain basically easily become part of this. And what the Universal Intent Engine does, it tells you on any chain that pops up, solvers know exactly where to go on that chain to find these intents, right? So we're basically trying to solve this problem as stage one, with providing the backend infrastructure to make bridging and interoperability really, really easy between chains, but also putting in the liquidity incentives to make the system work and make sure that those solvers are incentivized to participate in different chains. I think step two here is making sure now that this is nice. These intent-based solutions and this universal intent engine are nice developer solutions. What we really need is wallet infrastructure that just abstracts us away from users, right? What we need the experience is, hey, I'm a user on Arbitrum. I want to go and trade something on some other chain. Maybe that's another chain in the Arbitrum ecosystem even, right? Maybe it's Ape Chain. And I want my wallet to do the following. I want my wallet to say, trade this asset on Arb for this asset on Ape Chain. Abstract away the fact that on Arbitrum, the gas token is ETH. On Ape Chain, the gas token is Ape, and just do this for me. And by the way, show me my balances in one place. Right? We have all the technology to do this, but I think this is basically where 90% of Interop lives, and we've been pushing very, very strongly ahead with this vision, and really want to see Ethereum Interop look like that. Look like the user goes, they can do anything cross-chain in the ecosystem. There's an intent-based solution that works in the background eventually again. And that's where the 90-10 comes in. Maybe in a year or 2 or 3 or 4 or 5 from now, the background infrastructure is going to swap out a little bit. Maybe it'll be more efficient. Maybe it'll be more trustless. Maybe we'll rely less on Intents and more on something else. I don't know, but we have enough today that we can already build an excellent user experience, and packaging that user experience together for users is, I would say, a large part of the battle today. And I'm confident that we as an ecosystem will do this. We have the tools to do this. We have the desire to do this. You mentioned, working groups. There's a lot of different teams coming together that are trying to solve this. And I think, we are definitely doing a large part in bringing a lot of the tech to the table that makes this possible. And I think together as an ecosystem, we will solve this for users.
So just like, I just want to follow up here with like a quick question to that. So you say that intents, it sounds like intents more or less get us 90% of the way there in terms of solving interoperability. And I've seen other discussions where they focus more on the research side of things. So like real-time proving. Some people say that like true interoperability won't be here until real-time proving's here. I guess in your view that this is essentially like a non-issue, right? Like intents mostly get us there. Real-time proving and stuff would only serve as like a complementary, or if you could just help me complete the view here.
I think real-time proving actually, I'll say something even a little spicier. I actually don't think real-time proving helps very much. In many of the ways that people think it does. I think Intents is one, good piece. There's also, tools that can be used for arbitrary message passing as well. And there's a host of different solutions and different service providers. We work across Interop with teams like Across and Layer Zero and Chainlink. There's a lot of different, and Circle, right? There's a lot of different pieces for different particular assets that also can help. So it's a lot of it's packaging it together. And that's why, really the wallet's helpful, right? If you're using USDC, you'll probably use, Circle's native, CCIP, right? If you're using some other asset, you might use an intent, right? So it's really about packages to users and not, making a user say, okay, for this particular asset, like what should I use? Should I use a cross? Should I use layer zero? Is this an OFT? It's really about packaging this together and making it seamless for users. But to your question though, around real-time proving, there's a big problem that people don't really address. And real-time proving doesn't actually solve this, right? So the vision of real-time proving, and I'll try to sell it for a second before I tell you why I disagree. The vision of real-time proving is, hey, we can just use zero knowledge-based solutions. If chain A can basically just give you a proof of what it did to chain B, right? So chain A gives a proof to chain B of the current state of the chain, and it's real time. That's all you need for Interop, right? Because chain B just ingests that proof and done, doesn't need to wait for anything else. Wonderful. It can go ahead and process those balances, and you can just basically pass these proofs along in arbitrary ways, and chains just can trustlessly do everything. It's a great vision. The problem is there's another piece. So say that I'm chain A and you're chain B, and we're both real-time provables, zero knowledge chain. I hand you a proof in real time that says, hey, on my chain, Alice says that she wants to go ahead on chain A. Alice says that she wants to go ahead and transfer funds to chain B. You see that proof, you verify it, it checks out. So now you're saying, okay, so chain B can go ahead and now, and now accept that deposit, if you will, right? So honor that cross chain send. Now let's say the problem is, this doesn't really work unless you trust me, the operator of chain A or the sequencer or whoever that is, whoever's producing that proof, right? What's stopping me from producing a second proof? A second proof, also in real time, that says actually Alice is sending those same funds to a different place, right? So you have now, I can produce, if I'm the one producing that, producing those proofs, say I'm the sequencer of that chain or whatever that role is in that chain, I go ahead and produce you two different proofs that are two different histories, right? And if you will, double spend Alice's coins. And the answer, what's stopping you is you don't want to actually just trust a proof from me. A proof doesn't mean anything unless it's the canonical proof. You need the L1 settlement time, right? So you need to actually go ahead, and this proof is not just a proof of some chain. The transactions that I'm proving are included in the L1 block. They have finality, those transactions. So I know that, hey, it's not just Steven giving me a proof of some set of transactions. I actually know that those are the correct transactions. So I needed really two things. I need to know that the set of transactions are final, are correct. And also I need to know that, okay, what happens? What's the execution? So the proof can provide me the execution of those transactions, but I also need to know that this is the correct set of transactions, because otherwise I can give you two very, very different histories of my chain, give you real-time proofs, and they'll both seem correct to you, and you won't really know which one. If you accept one, I can go and kind of rug you and give you the second one after that. So what you really need is finality. And it turns out that L1 finality is not something we can do in real time, right? It takes 12 to 18 minutes to get real layer one finality. So if you have these two ZK rollups, even if they're giving you real-time proofs, until you have that finality, there can be an L1 reorg, right? So even if you see it on layer one included in a block, there can be a reorg, and that set of transactions that you're looking at, which you have a proof for, is worthless, because the actual set of transactions that were included in layer one is a completely different set of transactions. And you actually gave, you credited Bob in your chain because you saw proof that said, hey, Alice paid Bob and asked for those funds to be sent to your chain. But actually, in the real set that actually ends up getting finality, Alice sent those funds to Carol. And now Bob has these chains. So what you have is one of two things. Either you need to wait for L1 finality, or you basically need these chains to trust each other, right? You need to trust me, not that the proof is correct, because that you can verify, that I'm not going to create another proof. But if you need to trust me that I'm not going to create another proof, then the proof is not very helpful. You're just kind of trusting me, right? So just trust me that I'm going to submit these transactions to the layer one. So that's why I'm bearish I'm not bearish real-time proving, I should say, because I think it's a great technology and zero-knowledge proof is fantastic. But I'm bearish real-time proving as being a real-time interop solution. I think there's always going to be this optimistic period where you're trusting someone. And therefore, until we get to like instant finality in layer one, which we're nowhere near, I don't even think we have paths to know how to get there. Until we get to that point, the delta between instant zero knowledge proofs and zero knowledge proofs that take 10 minutes is actually not going to be very, very helpful for us.
That makes sense. I want to talk about this wallet thing that you brought up twice, because I agree with you completely. I think we should abstract as much as we can at the wallet level, especially with intents. Completely, I think some stuff is theoretical, and we work towards like some theoretical interoperability. But at the end of the day, like intents are fantastic. There's some trade-offs that come with relying on solvers, but I mean, yeah, if you have to trust parties, you have to trust parties. Are you guys working on anything with regard to that? Like, are you working with wallet providers? Are you working on your own solution potentially, or how do you see that like wallet space evolve to abstract away orbit chains, but also abstract away like other L2s or interactions between them?
Yes, we're working very, very, very heavily in the interoperability place, and think that it has to be number two things. One, it has to be a solution that involves many different parties, right? And that's actually one thing which I think I want to zero in on in a second. Interoperability is never going to be solved by one team. And what we like to do is say, how do we build our technology, but also work together and help and facilitate the ecosystem in solving this. If a few years back, and we still a partnership that's actually very strong today, we announced a partnership with Espresso Systems on interoperability tech. I can talk about the specific flavor what we're working on with them, but I actually want to make a meta point, which is, and we announced then, this is true then, was true then, and is true today. The reason why we want to work with others is because if I went ahead and created the Arbitrum interoperability stack, I can promise you that like the OP chains aren't going to use it, and like Polygon chains aren't going to use it. And I very much think that in order, to get out of our own way, we need to actually enable neutral parties, work together, put out, really good infrastructure together with others as well, that we can all sign on and say, hey, this can be the interoperability stack, not just for my particular stack, not just for Arbitrum chains, but actually for Ethereum and maybe even beyond, right? And let's just unify as much as we can. And I think this is a mistake that a lot of teams fall into, where they very much try to build a walled interop, experience in their particular branded environment. But we have a larger environment that we're trying to interop. That's called Ethereum, right? So I don't need to create some other like multi-chain structure in Ethereum. My goal with Arbitrum Orbit chains is to make them as easy to connect to any chain that a user might want to go to, right? So it's not just say, hey, if you're in the Orbit ecosystem, you can connect really, really fast to any other Orbit chain. There will be times, by the way, where from a technology reason, we can have better tech between two chains like that. And of course, we should use that. But more broadly, unless there is a good reason for it, I don't want to build artificial walls. So if the universal intent engine that we mentioned is a great example. It's just EVM contracts, and there's no reason that you can't launch it on any EVM chain. So I don't want to build a wall and say only Arbitrum chains can use this. I actually want to build the best interop. Because if you're a user, if you want to go from Arbitrum to Base, you're going to get there. If I try to add like friction, it's just going to make you more annoyed, and maybe your likelihood of coming back will be less, right? We're not stopping you from getting there. So therefore, I think the thing that we can do best is say, how do I make that path for you to get, in this case, off of Arbitrum, the easiest and most seamless possible, and not add any artificial friction at all. So, we're working very, very hard. We'll have, more to share specifically soon. We already announced the first phase of our work here, which was the universal intent engine to make interop between any two chains, fast. And again, our goal here, by the way, there are a lot of interesting people working on, a lot of really good people working on this. The EF is working on this. We just want to bias towards action, right? I don't want to spend a year writing the absolute best spec and then another year implementing that, because I think so much is here today. I want to say, hey, this is what works today. We're building this right now, which is what we're doing, and we can continue to analyze it and can continue to improve it. And I want to be in all those conversations and calls. And if in a year or two we have something better, let's swap that in. But this is a solution that this is a problem that needs a solution today. So, and yes, we will be doing a lot more. So some alpha will be doing a lot more in the space directly as well. But I'll leave it there for right now.
Yeah, and so actually I kind of want to touch on that. So Offchain's played a big role in Ethereum's development, uh, both with this universal intents engine and also with the Prism client that you mentioned earlier. And so just like I'm thinking on like a greater scale in the Ethereum ecosystem, beyond Ethereum's current problem area of scaling, what are there any other primitives that you think should be enshrined into Ethereum for greater versatility of the network?
I would say, other than like things like continuing to iterate on like precompiles and the like, I would say that the current development path, is the right way to go, where we have a very a roll up centric roadmap, and allow a lot of the, say, execution innovation to happen, in the inside the rollups. Now, if there are like precompiles that will make all rollups life easier, then I think that's something we should absolutely do and look at. If there are new cryptographic precompiles and the like, things we can enshrine inside Ethereum. But I get very nervous when people talk about enshrining Ethereum, that we're going to actually stifle innovation. If I look at Ethereum compared to the other ecosystems, the thing that it has really nice is the flip side of this quote unquote fragmentation coin. It's the fact that you have, dozens of independent, excellent core development teams building on Ethereum with slight variations, because they're not the same people, not the same teams, and don't have the same ideas, but often have, very similar or at least overlapping vision. If we stifle that innovation and we got to some of what our competitors' ecosystems look like, you'll have one or two teams building out the entire ecosystem. And you know what you'll have? You'll have less fragmentation. You also have less diversity. You'll have less experimentation. And I think ultimately that's a bad thing, right? So I'd like to see Ethereum, continue on its path and not enshrine like deep execution, unless it's like really like a common denominator to benefit all rollups. Like, hey, if you could say, hey, all rollups need the EVM precompile, so like let's figure out a way to do that in a way that, as Vitalik said, he put out a blog post about native rollups in a way that's extendable. So now, we have this base thing which everyone can use on efficiently, and now you can add all these other features. That's fantastic. But if you look at Ethereum, even in execution environments, you have us that are supplementing the EVM with Arbitrum stylus. And by the way, that's not a new concept. If you go back to Ethereum history, there was something called eWASM, which was the exact same vision. It wanted to do that on Ethereum. That project was discontinued, but not for, really mostly for technical reasons. We've, accomplished that today. And, I'd love to see that eventually go back and, become part of core Ethereum if the community is interested in it. You have teams like, Fuel building the Fuel VM. You have the Starkware team building Cairo. You have teams like Phoenix building a fully homomorphic encrypted version of the EVM. The idea is that this innovation is very, very powerful. And if you fast forward 5 years from now, I can't tell you for sure. I have my ideas, but I can't tell you for sure which one of these paths will have won out and which will be more dominant than. But what I can tell you pretty much for sure is that the EVM as it stands today will be improved by then, and will have taken innovation from one or more of these paths, and it will become part of the core EVM. And that's why I think it's so important not to cut off this experimentation or discourage even this diversity on Ethereum. Yes, it comes with a price. It looks like fragmentation. You have different teams with different visions doing different things. And, it's a lot less, it looks a lot less cohesive than, say, another ecosystem where one team's calling the shots and there's no one else, dissenting, and everyone's building towards the exact same API. But this is a place where I disagree with, say, Toli, who says, "Hey, there's only 6 interesting smart contracts. We don't need to execute. You don't need to innovate on the execution layer today." I think that's I think that's an incorrect vision, because I think there will be so much innovation. And by the way, don't just look forward and take my guess. Look backwards. 5 years ago today, right? Like completely different world. I remember when we were initially raising funds for Offchain Labs. It's a little more than 5 years ago, about 6 years ago, and no one wanted to talk to me. By the way, the word rollup didn't exist, and initially people didn't want to talk about something new because their question that they had was, "Is it a state channel or is it plasma?" Right. So the notion was, back then, everyone knows that scaling is going to happen via state channels or plasma. And if you don't agree with that, then you're wrong. And I don't even want to talk to you. Obviously, that's not the way that things evolved. And now we have something called rollups, and state channels and plasma look like things of the past. Although there's been a little bit of a resurgence in interest in plasma, but still, rollups are dominating the day. So I think if we look backwards, we'd be foolish to say that we know today exactly what the future will look like. And the only way that we know that Ethereum will be safe in the future, and by safe I mean continue to be relevant, is if we allow that innovation to happen. And the good news is that innovation is happening primarily on Ethereum. So I don't know exactly which thread will win out, but I like all these smart people with different ideas doing their things in the Ethereum ecosystem.
Yeah, yeah, so like the EWASM, like Ethereum 1.x, that's a deep call, yeah. So just to touch on the safe portion of what you've said, Ethereum is known to be likely one of the safest chains, right? And just like in terms of like the sheer number of consensus and execution clients, right? But at the same time, something can be said that these clients might like slow the time for like an Ethereum upgrade, and many have said this online. So I'm curious to know, like, how would you, from the perspective of someone that like helps develop the consensus clients, balance the product update like timeline for Ethereum?
So one of the nice things about the layered architecture is we can have innovation in different layers and not actually have to have a dependency on them. So I think it's a good thing that the consensus client layer moves slowly. What I think that would become a bad thing if we said, "Hey, we can't do any innovation anywhere else, or we can't have execution layer innovation because until we figure out this consensus, please." So even in the consensus client, right, we've done a lot of innovation there, right? The whole move from proof of work to proof of stake, the merge, was a years long process. Maybe that was, you'll say that was slow, but I think that there's an aspect of getting it right and understanding Ethereum is a very mature project today. We can't just push changes willy nilly. We actually have to test them, make sure that they're really the responsible thing to do, and battle tested before we actually put them live on mainnet. So there's definitely some friction there. But again, the nice thing about the layered architecture is it's not really slowing down innovation on these other layers, right? When Ethereum moved from proof of work to proof of stake, Arbitrum also moved from proof of work to proof of stake, but it didn't have to do anything, right? It just benefited from that layer underneath it. And Arbitrum has been able to evolve itself and add stylus without any input or without any approval from the execution layer, right? Even internally, the Prism folks didn't have to say, "Okay, we're going to allow stylus to happen," because all that it is smart contracts that tap into Ethereum. And that's actually the benefit of the layered architecture. So I think it's good to have certain layers that move a little slower and certain layers that move a little more quickly. And that, to me, is literally the entirety of the benefit of the roll-up centric roadmap. If you take a different ecosystem which doesn't have this, and you wanted to make some execution change, you're going to have to actually do that coupled together with the consensus client, and have to make this whole system-wide change and test all these pieces together. Whereas now we have very, very well-defined APIs. If you don't change, the EVM layer, do whatever you want in the consensus, as long as we think it's a good idea on that layer, and everyone else will just inherit that. I think that's how we allow for both, the software to ossify, but also to have innovation where we think we still need rapid progress.
What's up, guys? Welcome back to 0x Research. Today, I'm joined by Antonio from dYdX. Thanks for coming on, Antonio.
Hey, thanks so much for having me.
What would you say is the North Star for dYdX?
Yeah, so right now there's two things that are important. Trading volume is the hallmark of any exchange, right? Like that's users putting through real dollars in volume, real dollars in fees, etc. But one of the things we are very focused on right now is the number of active traders on dYdX, perhaps even more than the volume right now. And it's really just trying to make the product more accessible, make sure that it's not only really sophisticated traders that are trading on this thing and that have access to this thing, and really just trying to improve that by orders of magnitude to make dYdX more widely used. And that'll obviously play into trading volume eventually and into the bottom line, but probably users, I would say, is the North Star metric right now.
Perfect. And what would you say is your general outlook for 2025, both for dYdX as well as for crypto?
Yeah, so I'll start with dYdX and then we can zoom out. But with dYdX, as I mentioned, really in Q1, we're focused a lot on quality, focused on a few new things like this simpler trading experience. Then longer into this year, I think you'll see us starting to really develop some novel things on the product side. Again, what is that exactly going to look like? Again, I don't totally know yet. I have a few ideas. But I think you'll start to see the form factor of dYdX diverge from what you've seen in other exchanges, and that's going to be intentional. I really want to take a shot at developing a product that is new, and that's, again, really uniquely enabled by Web3. In crypto generally, obviously the price action has been pretty positive for the past month or two. I'm not going to make any wild predictions on where the price is going to end up by the end of the year or so. Hopefully we're in the earlier stages of a bull market, but we'll see on that. And these things have a way of teasing you and taking a little bit longer than you think. But the biggest thing that I'm always excited about, much more than the price action, is the development action and what types of new things are being built within crypto. I have been a big fan of Pump Fund just from the sense that it's a really novel type of product that we haven't had access to before. There's a lot of things going on with iteration of current products, dYdX, like a Uniswap, perhaps a Hyperliquid, some other things. But yeah, just really excited to see what can be built with crypto. SocialFi is another trend that I'm excited about. And just really trying to make crypto something that the real world pays attention to. Because I think crypto right now is something that's become fairly niche, and that's fine. Like, there's nothing wrong with that. But I got into crypto 10 years ago because I really felt like it has the potential to change the world. And have we done that as a space yet? No, not really. Like, sometimes we sort of did, or we were on the precipice of that with like FTX and SBF and all these sort of things, or that's what they promised, but that blew up. And now we still have great products. There's still a lot of opportunity for trading. That's really important. Obviously, I'm running a decentralized derivatives exchange. But at the same time, I am really excited about the potential of crypto to branch out beyond that and just become something that everyone cares about and everyone can pay attention to. And even if it's under the hood, plays a big part in their daily lives.
I'm going to shift away a bit from technical, and I want to talk a bit about the L2 landscape.
Sure.
Obviously, over the past year and a half, things have changed quite a bit. I think Bases has eaten a bit into the market share of Arbitrum. And we have other fast EVMs launching. L2s like Mega ETH and Monad just launched testnet. I don't know when they're going to launch their mainnet yet. But how do you guys plan on competing with these other chains, both on a speed level? I know you guys have the fastest block times. I guess activity level makes more sense. And on the other hand, one thing I feel like Arbitrum had going on for it was DeFi tokens and legit product tokens for a really long time. The market shifted quite a bit since then, I would say, like since the days of Arbitrum DeFi and L2 DeFi, and now we're getting more and more attention into random tokens. Is that something that you're concerned about? Do you think attention needs to shift back into Arbitrum in some way? Any thoughts on how to bring back more activity?
My thoughts are we have to have like very long-term convictions and what's important and what's not important, right? That being said, you can't ignore the short term, right? So if you're just going to look at the 10-year vision, you actually might not survive to see that 10-year vision out. So you can't just say, all right, I don't care about anything today. I have this other future in mind. You just need to build towards that. You have to engage with the short term, but ultimately, with a long term focus. I think we as an ecosystem actually did a very, very good job at that, right? So Arbitrum, meme season didn't take off on Arbitrum, right? So let's just call a spade here, right? It didn't happen there. Ultimately, I don't think that's a bad thing. We didn't go very heavily after it like other ecosystems did. There are some structural reasons, such as the front running protection and fairness, which I think made it less attractive for some of these developers to launch some of these things in Arbitrum. And those were values that we didn't question and say, all right, let's get rid of that to sort of make this more attractive for a particular type of token in a particular type of time. We had long-term convictions on the importance of certain aspects of the software and the bets we've taken. And we've built, I think, very, very strongly towards those. And actually, like, if you look at today, it's funny we're having this conversation today as opposed to say 3 months ago. If you look at today, we're actually seeing some of that come back. If you look at literally go to DeFi Llama today, Arbitrum is again the number one token, L2 when it comes to DEX volume, right? So it has for a while because of the meme activity, it wasn't, but when it comes to the real DeFi economic activity, that was always shining through an Arbitrum. As the meme stuff quiets down, again, look at today, and it's been that way for most of the past week. Arbitrum has reclaimed its spot, and it's I think today it's like number 4 of any blockchain. It's been number 3. It's like basically Ethereum, Arbitrum, Solana, BSC are basically taking those top 4 spots. So that's like an example of not getting too clouded, right? 3 months ago, you might have said, "Oh my god, like meme coins were it's losing," but like it's okay. Like have long term conviction about the bets you're building. I personally am long term convicted about a few bets. Number one is I just want to say Fi, right? The merger of DeFi and TradFi. We're seeing a lot of this, tokenization. Stable coins are doing really well in Arbitrum. Just a week and a half or 2 weeks ago, USDT announced the USDT Zero expansion, where Arbitrum is the hub now for basically all new USDT chains that are, other than the 4 originally natively minted chains. We're seeing a lot of this innovation as well. There's going to be some other interesting stablecoin activity that we're seeing in Arbitrum. I think stay tuned for some more announcements this month on that end when it comes to additional new stablecoin adoption, and we're seeing that happen very strongly in Arbitrum. So I think Arbitrum is doing well there. Another place where Arbitrum is doing really well. This is still a nascent industry, but what is gaming? Arbitrum has definitely the top L2 mindshare in gaming, and I would argue one of the tops in all blockchains. And that's a place where, again, it's not the most popular bet today. It's not the bet of like meme coins and AI coins, or maybe it's not the bet that was popular a month or 2 ago, but it comes from a long-term conviction. And when the market gaming didn't take off in a large way as soon as I thought it would be, we weren't like, all right, let's give up on this bet. No, we were like doubling and tripling down. There's the Gaming Developer Conference in San Francisco in a few weeks. We're going to have a very large presence there as an ecosystem because we have a long-term conviction in that bet, even if that's not the case today. And that's because if we look where the long-term value is. So again, if you look at these core metrics, today Arbitrum has been number 1 in TVL on the chain, and in overall bridge TVL from day one. Yes, it's definitely gotten a little more competitive, but also we don't manufacture any of our metrics at all. So what you see is really the truth. It's organic. It's what you get. Yeah, it'll definitely be competitive, but I think having long-term conviction and staying true to those is going to hold true. And again, we can already see that today, where these metrics, where Arbitrum had been lagging for the past few months, it's already becoming, rising to the top again as some of the what I'll call like short-term cycles, die down.
Yeah, that makes sense. I think we actually see this quite often because real-world assets and real-world use cases in gaming takes a lot of time and long time and a lot of effort and capital to build out. Often it's like a criticism for L1s and L2s that focus on them. One question I wanted to ask, and I've always wanted to ask this to somebody from Offchain Labs. You guys have potentially one of the strongest, most dynamic and kind of competitive governance forum and governance system, to the point that, do you guys at Offchain Labs ever worry that it might be negative for new applications if a lot of applications control a lot of governance and votes, etc.?
So I've developed a very strong opinion around this, really, and it's solidified over the past few months. And some of this conversation has happened in public. Some of it has happened. There was just at Denver, there was an Arbitrum Delegate Day. Some of this is happening in private as well among delegates. And I think that there's, and again, it wasn't me pushing this necessarily, but I think the ecosystem has really come to this sort of new understanding. And I think what we need is we need to really differentiate between different types of actors in the ecosystem, right? So there should be Arbitrum aligned entities, and then there are like vendors and service providers. I think one of the problems that we see in the ecosystem today is that there's no clear, line there always. So you'll have, and this is something which I had this, I won't say the details right now, but if you look on my Twitter, I kind of had like this whole public thing a couple of weeks ago where you had a service provider who was doing something, who was had a job to do something for Arbitrum DeFi, and then in the other breath they were just talking about all the other ecosystems are doing this. And like if you look at me at Offchain Labs, if like my head of product or my head of strategy was also the head of product, the head of strategy at my competitor, that would be a problem. At the same time, by the way, like I look at the lights here, if the utility company is also servicing my competitor, that's not a problem. I don't expect exclusivity for my utility company or my ISP or any of those services, even things like my auditors, right? I don't mind if, those that are auditing Arbitrum code, as long as they're professionals and good at what they do, are also auditing, competitors. They're not paid to be strategic and operators for Arbitrum. They're paid to do a particular service. And I think there has been honestly some confusion and conflation of these roles. And what we need to see is a delineation of, a separation of these roles, where there are service providers and vendors that do specific roles. And then there are those that are operationally and strategically pushing the DAO. And also, I think a strong, honestly, conflict of interest policy, which is, and we've seen actually this happen very well. A really good example is when the GMX folks actually voted to fund synthetics, right? So a competitor, but they were able to understand that in this role, it's not about them hurting their competitor. They actually want to do what they think is best for the Arbitrum ecosystem. And GMX folks, CoinFlip has been actually fantastic Arbitrum delegates. So I don't think that there is like again a hard line that need to draw on all these things. But ultimately, I think that what we need is in the DAO, we need that those that are making strategic and operating decisions of the DAO, and those that are incentivized to do so, are like all in and want Arbitrum to win. The same way, again, if you guys were at Blockworks but also working at Masari, I'll be like, what's going on? Like that doesn't work. Similar, I think, for us at Offchain Labs, and similar for the Arbitrum DAO. You need to make sure that the right people are making the right decisions, and that we're not like incentivizing. The DAO has these programs to incentivize delegates and pay delegates. It's not paying them or incentivizing delegates in ways that sort of doesn't ask for that allegiance and doesn't require that commitment. Like any job, even if it's not an actual job, it needs people that are aligned and want the DAO to win. I think that's the fundamental root, I think, that will answer all those questions. So when it comes to how can new projects come in and align themselves, well, the answer is like, if we have the right set of people at the DAO, and the right set of people doesn't mean they necessarily agree with me and everything. It just means people that are there with the right incentives for the right reasons, that they want Arbitrum to win, whatever that means to them. And it might be a different thing for me. That's great, because I'm not them and I'm not the DAO. And we want people with diversity of opinions and diversity of thought and how Arbitrum wins. But the place where I don't want diversity is I want everyone that's making decisions to want Arbitrum to win and to be aligned for that outcome. And if that's the case, and it's the best thing to incentivize new projects and new protocols for the DAO, and not just entrench, existing ones, then I think that we'll get to the right decisions. But again, I think the answer is really one step earlier, making sure that the incentives and the alignment of the people making these decisions are what you'd expect in any organization.
So I'd like to follow up on this point as someone that's pretty involved in the DAO. I've seen some like talk lately about like preferences to certain protocols. So like just like the DAO should have like a preference to Arbitrum aligned protocols, like native protocols, versus like something that's multi-chain, something like or I won't give an example, but like I kind of see this in a way being conflicting with like embracing more of a multi-chain interoperability like ecosystem, right? And so like how would you, in your view, how do you reconcile like these two things, like trying to like build out a native ecosystem alongside like the whole like allowing an Arbitrum user to access any protocol on from anywhere? if that makes sense.
It makes a lot of sense. I think ultimately, it's going to be both of those. Like if you look at, we mentioned Arbitrum DEX volume before. If you look at, where's that volume coming from? The number one, this again, just today. So number one is Uniswap, and number two is Camelot. So you have right there, right? And by the way, an Arbitrum is not just like another Uniswap chain. If you look at Uniswap's volume, where does their volume come from? It's probably like 2 point something billion yesterday comes from Ethereum, and 600 or so million come from Arbitrum. So Arbitrum is like definitively like a very, very important chain to Uniswap, and actually a massive driver of their volume, right? Even the fact that it's like about a quarter or so of Ethereum volume, and the number two chain today is important. So that's to say, like, I think Arbitrum is in a very strong position that it's not just like another generic deployment for these protocols, but actually even for the multi-chain protocols, pretty important and pretty exciting. And I view, I assume that the incentives will be aligned there. But of course, there's also importance of having a native ecosystem, and making sure, again, it's about alignment, right? Making sure that projects that are all in an Arbitrum and want Arbitrum to win, because certainly with protocols that are multi-chain, they'll just follow the users, more immediately, and feel like, okay, where are my users? If they're on Arbitrum, that's great, but like they're less like necessarily bought in, you know, de facto, in an automatic way to the Arbitrum vision. So the answer is, like everything else, I think you need a really strong balance between these two. I think we want Arbitrum to be, the best experience in the way that your cross-chain and multi-chain behemoths, Arbitrum should be a very important chain to them, and one where they know that their customers can come and they'll do well. But also, I do think having a homegrown ecosystem of innovation is important, because I just don't want Arbitrum to become this chain where it's just like these established protocols, but the innovation is happening elsewhere. And often when I'm building a new protocol, no one starts off as a multi-chain, behemoth. They have to start off somewhere. So it's really the question of how do we incentivize those that are choosing their very first place to build? How do we make sure that they're Arbitrum home, and Arbitrum is a comfortable place for them? And I think we have to make Arbitrum open and fair for all of them. And actually, if you look to Arbitrum's history, this is really enshrined in the values that brought Arbitrum to where it was at the very, very earliest days of Arbitrum. Arbitrum went live to developers in May of 2021. Arbitrum only went live to users in August of 2021. And there was like there were a lot of people pushing in, say, July of that year, in July of 20, hey, we're ready, open this up. And we said, no, we really want to give everyone a fair and open shot to be ready at the same time. And let's go back to the DEX example. On the same day that Uniswap went live, SushiSwap went live, and another DEX you may have not heard of, called Swapper by DXDAO, went live as well. And the reason I mentioned that is it never was us saying like, hey, we're going to roll out the red carpet for this particular DEX and make them win. It's like, hey, no, we're going to try to be fair and create an open and competitive ecosystem for everyone. And if Uniswap is winning on layer one, there's a very good chance that they're going to win on layer two, because they're probably winning for a reason. They know what they're doing, they know how to execute, but it's not going to be because we unfairly advantaged everyone. So the best thing that we can do is create an environment where it's open and fair, and everyone thinks that they have a fair shot. And by the way, I think if you look more broadly at the Arbitrum ecosystem, this neutrality is actually something that's helped it a lot, right? So if you look at stablecoin volume today, or stablecoin market cap, Arbitrum is one of the top chains for stablecoin market cap. It's one of the only chain that has significant, measured in billions of dollars, of both USDC and USDT. And the answer is because whereas there are some chains that like are USDC chains, and like USDT would not be welcome there. There are some chains that are USDT chain, right? We don't expect to see a large USDC balance on Tron. I wouldn't expect to see a large USDT balance on Base, because these ecosystems are sort of natively aligned with these. Arbitrum has always been a position of, we want to do really well on our layer. We want to really be the best infrastructure layer, but create opportunities for everyone else to create open, competitive innovation. And we see that happen, right, with assets as well as protocols, where they can come and have their best shot. It doesn't mean that the little guy, it doesn't mean that Swapper is going to outcompete Uniswap. It doesn't mean that the little ones will always, do that, but it means that they're not going to be unfairly disadvantaged. They'll have the opportunity to execute. And what happens sometimes, the larger ones win. Sometimes you have something like GMX, which came to Arbitrum when it was, actually came from BSC originally. It was basically had had no traction at the time, and has turned into one of the most important protocols in all of DeFi. And that's because we didn't say, oh well, you have to be successful to get an advantage in Arbitrum. It's like, no, if you're a team that's willing to build and try, you're going to have a fair shot. Some will rise to the top, others won't, but it won't be us, putting our thumb in the scale and deciding who the winners are.
Perfect. That makes a lot of sense. Stephen, before we end it, I have one last question. What, I guess, upgrades or initiatives are you guys working on at Offchain Labs over the next few months that you think people need to look into, that they should read more about, research into, and what should they be looking forward to over the next 6 months or maybe a year?
Yeah, so I think we've covered most of them today. I would say Stylus is definitely still a sleeping giant today. We're seeing some really interesting usage of Stylus. One example is a team called Renegade Finance, which is doing on-chain dark pools. And the cool thing here is these have about a ton of zero knowledge proofs in them, maybe about a dozen ZKPs verification for every transaction because it's doing this like private dark pool. The irony is, because Stylus allows you to bring in off-the-shelf, zero knowledge or cryptographic libraries written in other languages that are about 10x more efficient on average than, say, Solidity, it's actually becoming, even though we're not a ZK rollup on the application layer, Stylus, makes Arbitrum the most attractive place for, say, zero knowledge protocols and zero knowledge applications. Again, because you can bring in these native cryptographic libraries that are just much, much more efficient and have been around for many years. That being said, today the innovation that we're seeing is mostly in these areas like Renegade, where they're doing things that are fundamentally impossible without Stylus, right? They're bringing in libraries that, doing the amount of ZKPs in this example that they couldn't do otherwise. I think what's underexplored today is Stylus as a scaling solution, right? Because maybe you want to do something that's running just fine on chain today, but it's computationally expensive. You can say, hey, let me rewrite some of these components in Stylus and I'll get a 10x benefit. So that I think we've seen less of today, but I think that's going to happen more and more over time. The foundation is investing heavily and has grant programs, targeted at Stylus developers. So I think we'll see a lot of that new innovation come out there over time. And I watch that. I continue to watch things like Timeboost, as I mentioned. Watching that vote and seeing what happens is interesting. If it does go live on chain, which I personally think there's a very good chance that it will, and it's something that we are proponents of, then I think it's going to be interesting to see how that develops over time and how those markets, stand themselves up and come and just keeping an eye on that, I think is going to be very, very interesting. And then really just on the side of the ecosystem development, you'll see, at least from my team, but I think just from the ecosystem, more convictions in our core bets, right? So DeFi, TradFi, stablecoins, RWAs, and gaming are going to be pillars. That doesn't mean that we won't be interested in emerging trends as well, but it means, you always have to balance these things. And we're, very much going to be in the camp of, we are a very, very long-term vision. And even if there's another cycle where, we're still not valuing these things as much, we think there's a lot of value there long-term. And we've been pretty consistent on that for a very long time.
Perfect. Stephen, thanks so much for coming on. This was fantastic.
Thank you so much for having me.